When we look at the readjustment of investment capital allocation in Saudi, we would argue that the positives of this readjustment is actually outweighing the negatives of the readjustment, in that the concerns and the considerations on funding, on the external sector, because these projects consume a lot of FX reserves by way of paying for a higher import bill, the liquidity considerations, as well as the focus on the return on investment. All of these considerations, when we see the readjustment of the investment allocation, is actually positive. Now, at a micro level, specific companies that are in the construction sector, yes, may have to reposition and realign with the government's priorities, whether it's by area, as Zainab was explaining earlier, or by specific projects. So there is a downside in plans that the construction companies may have had for 2024 and beyond. But overall, from a macro perspective, we do see positives.
Saudi Arabia has been the largest bond issuer this year, even more so than China, which is an amazing statistic. And the question that I always get asked from people outside not so familiar with the region is whether Saudi Arabia are beginning to face serious funding issues, because there has been a pickup in bond issuance. You see the secondary sale offering for Aramco, recently Aramco deal, etc. Broadly speaking, there's been a pickup in capital markets activity. Is this a reflection of Saudi's finances getting squeezed? And if so, is it worrying?
Joumanna, when we look at the fiscal performance to date, and when we look at the fiscal performance into the future, it does seem that the oil prices currently are trading below the break-even of Saudi Arabia, and that the fiscal deficits will have to continue being funded by both external issuance on the Eurobond front, but also domestic issuance on the local currency front. So yes, issuance is rising. Public debt to GDP is rising from a moderate base. So we're starting from a 25% of GDP base. We will probably see public debt to GDP increasing to about 30% of GDP. When we add to it the state-owned enterprises debt as well, that puts the debt to GDP of the public sector closer to about 50%. So debt is on the rise, but as long as growth continues to be positive and be close to what we estimate is a non-oil sector growth of 4%, then we're not concerned about the funding constraints for the economy. The economy is borrowing, and Saudi is borrowing to grow and to structurally expand its non-oil sector, which is now about 20% larger than the pre-pandemic base.
Yeah. I mean, obviously, that's been a big push for Saudi 2030. That essentially is what Saudi 2030 vision is about. It's not just about building projects like Neom, but about diversifying the economy. Let me just ask you the other question that always comes up, and that is one that pertains to oil, the price of oil. If oil stays where it is right now, $85, it feels as though that there's less pressure on Saudi public finances. But the picture could be very different, say, if oil were to drop to $70. So how dependent is the Saudi Arabian economy to this day still on where the price of oil trades?
Downside risk to oil prices remains the key risk to not just the Saudi economy, but most of the economies in the GCC or in the MENA region that are oil exporting economies. And yes, diversification efforts have made progress. We've seen some progress on the non-oil sector expansion. We've seen significant progress on the public finances, with non-oil government revenue constituting a larger share of total government revenue. Where we also need to see more progress, especially going forward in the next phase of diversification, is on the external sector, so that funding coming into the economy becomes less correlated to oil prices, and non-oil exports can make up a larger source of FX proceeds into the economy.
The other big question mark for the Saudi Arabian economy, and indeed for the region as a whole, is what they can do to attract more FDI. I actually put that question to the Saudi Finance Minister, Joumanna, a couple of months ago, and what his response was, FDI in general everywhere has slowed down, but it does feel that it is rather pronounced also when you think about the money that's going into Saudi Arabia. Is there anything they can do to attract more foreign money?
I think the structural reform momentum will likely continue in Saudi Arabia and in the rest of the GCC, as many GCC economies also focus on the FDI angle of diversification and attracting more funding into the economy. The interesting part that we're seeing in Saudi by way of reforms and progress is also on the local currency debt issuance front, where Saudi is not only looking to attract FDI and is trying to implement the reforms that would be conducive for higher FDI, but also putting in place the building blocks to begin attracting a larger share of foreign investment into local currency debt markets to diversify sources of funding, dollar funding, into the economy.